then I guess I'll hand over to Candice. Awesome to have you here, of course, as well. And yeah, handing over to you to give some insights into what we see on the platform in terms of data.
Thanks, Christian. Before I dive into our data, I first want to contextualize and explain to our viewers where it's coming from. Based on the transactions on xChange, the research reports team together with our data team compile a container logistics report each month. So all the data I'll go through is based on the activity that takes place on the xChange marketplace. There are some snippets from last month's report, which reflects on April, but we also have some new data from May to reflect closer to the month that we are now in. So you can head over to the next slide. Thank you. So in true post-pandemic fashion, April and May this year were both eventful months. But today, since we are looking at what affects trading prices the most in particular, we've highlighted the lockdown in China as the major event doing so, which Andrea also noticed in his own business operations. So if you look at the right-hand side where it says April's top 10 ports with the highest change in price for a 20 dry container month on month, this was data taken from April, which was about a month into lockdown. And you can see that container prices dropped in most notable ports, with some outliers due to their own tumultuous bubbles. And even up there in the green box on top right, where this is where we usually get the highest prices for our standard containers. And I updated this table today to reflect the last week in May. And I can already see that the highest three prices are already lower than what they were in April. So it's the prices are continuing to decrease in May. Just to call out the outliers, just because I'm going to bring them up a bit later again, but obviously Ho Chi Minh, which is in Southeast Asia, the prices have increased a bit due to the inflation. Then, Los Angeles and the rest of the US is, battling its own congestion and having its own, struggles there. But yeah, just wanted to highlight that most ports, it seems, are following suit, following China's plummet in prices. You can go on to the next slide now. Great. So the question, of course, is how is lockdown related to, or lockdown in China related to price globally on such an impactful scale? Like, how does this happen? The answer, of course, is that being the biggest exporter as well as manufacturer of containers, the world relies on China most of all, right? So effectively, price is a product of demand and supply, and the trend seems to originate, or the global trend depends on the activity in China. So to explain the low demand that both Danny and Andrea also touched on in the context of China now, is that because of its lockdown, liquid supply is kind of stuck. So supply is essentially not low, but stuck. And because of the same fact, demand from China is also lower than normal. So with this low demand, here you can see how container prices in China continued to decrease in March and April for both a 20 dry container and a 40 high cube, which are the most popular containers used on our platform. And also, as I think Danny said, make up the biggest volume of the container fleet. But to explain how the rest of the world follows suit, follows China, and to look at something closer to as it stands today, let's go on over to the next slide. Great, thank you. So here where it says location analysis, this is a snapshot taken from our xChange trading insights, which we'll look at live in a second. But here you can see our location analysis of China and Europe for a 40 high cube. The price trend of Shanghai is represented by the blue line. And you can see how Hamburg and Antwerp, essentially major ports in Europe are showing a very similar trend, almost parallel or exact to China's, which, yeah, if we can just look it up live now, Christian, to show kind of how other parts of the world, not just Europe, follow suit. Maybe we can look at the 20 dry container trade too. Thanks.
Let me see whether I can get this going. Just a second.
Thanks. While Christian is busy pulling it up, just wanted to explain that this Trading Insight page we're going to look at now is an exclusive insight feature to our members and clients. So today you'll get a bit of a sneak peek as it's not available to the public.
Hope you can see my tab now.
Yes, we can. Thanks. All right. So here you see the location analysis on the left here, and you can see again Shanghai, Hamburg, and Antwerp. And I was just about to ask you to do that, so thank you. If you click the time interval to all, you can see again that very similar, not identical, but very similar trend that it seems to be what Europe seems to be following, which shows that the correlation is not just exclusive to right now and the lockdown. It's something that happens regardless of what happens in China. I thought next, Christian, we could change the container type to 20 DC and just see what that looks like. Maybe back to time interval of the last 3 months, because it's just a little bit more palatable on the eyes. Thanks. Yeah, I'll just wait for that to, yeah, there you go. So it's similar, sometimes not exactly parallel as, they're following or China directly, affects what happens, and then it only plays out a few weeks later. I also thought we could now show a 40 HC and change Hamburg and Antwerp to our outliers, maybe Los Angeles and Singapore, just to kind of see what those look like. As I explained, these are kind of doing their Singapore and Los Angeles are kind of battling with their own disruptions and issues, but there's a similar kind of trend, but you can see there's a bit of a peak and a bit of a trough in the last week, and then ending off, Christian, could we go to try some other ports like Toronto and Port Kelang and just see what that looks like. Cool. Yeah. All right. So again, similar to China, and basically this is a really good page to see how the world was a good indication of how the rest of the world is following a similar trend to China's. Basically, China is important and prices everywhere have been going down because of lockdown, bar some outliers. And then, Christian, could you please now scroll down to where it says forecasted price range? So you can see where it says forecasted price range, and you can look this up, or our clients can look this up for all the ports we have available. Looks like the prices next week should stabilize, with some still decreasing, but there is some hope that the prices are going to stabilize and not continue to crash, or not crash completely. Thanks, Christian. I'll let you switch back to the PowerPoint while I explain the next thing. But basically, container prices have not crashed completely and are expected to stabilize. And this is because of two things. One is that the capacity is tied up on the vessels waiting outside China with containers filled with cargo. And the second is that the big players are not currently offering their containers in China. They are waiting for lockdowns to ease and are hopeful that the prices will shoot up again so that they may offer the same containers at a higher price in China, essentially making more profit. And this is effectively taking out the capacity from the market. So just to recap, prices won't continue to drop forever, as Andrea also mentioned. And the person who is going to predict when lockdown in China ends the closest to essentially flip containers is going to come off best in this scenario. Great. And you can just flip over to the last slide of mine. I'll end by saying that if you want to check out our full report that has similar insights as I've described today, you can find it on our website under research reports. We release this report at the beginning of each month to report back on the previous month. So on June 1st, which is next week, the report on May will officially be out. We post updates on the report on LinkedIn regularly too. And we'll also send each participant in this webinar their own copy of the report next week too. So thanks again. Thanks, Christian.
Perfect. Thank you so much, Candice. This is very, very insightful. And for all of you who are now intrigued to learn more about our trading insights, feel free to get in touch, and we're happy to give you access. It's a beta feature still, but it's improving relatively quickly. And of course, the idea is to provide increasing transparency into prices and availabilities in order to help you make better decisions. Now, looking at the time, we only have 4 minutes left. I was scheduled to also give a little bit of an insight into what I think or what we think about container prices in the mid to long term, but I think we'll skip this and use it for another time, and maybe we can reserve the last 3-4 minutes for some questions, because I've seen the chat sort of going not ballistic, but going live. Maybe if I just scroll up here, just give me a second. So actually, right at the beginning of the webinar, Christopher asked that 9 months ago, container availability was really tight, and you needed to book weeks in advance. And now it seems that sort of 1 or 2 weeks is enough. I'm not sure what trade lane you refer to or what ports, but I let the audience, I let Danny and Andrea sort of weigh in on that. Is there any explanation for this trend, or do you observe this at all as well, or is this contrary to what you see?
So, to answer that question, I think the situation in China with all the lockdowns, that takes away some pressure on the global supply chain. And I think that is the main reason why it's now possible to have a booking 2 weeks in advance instead of 6 weeks. I think that is the reason.
Gotcha.
Yes, I completely agree with Danny. We noticed, the real effect of the lockdowns, which is mainly concentrated around the Shanghai area, is due to the lack of cargo, and the main effect is given by the fact that the containers will remain in China on idle for a long time. But also the whole situation has been compressed by a combination of other factors, and that will lead to availability of containers, but less chance to move them somewhere else. So that's the main point, in my opinion, I guess.
Gotcha. No, makes a lot of sense. And then we have Caesar asking about pickup times. And actually, Andrea, this was also part of one of your slides, that you see sort of the times that buyers or users, leasing users need to fully pick up a release is getting longer. Do you think this will last? This will worsen?
Well, it depends on the sector. If you look at the oil and gas sector, if you look at the countries, trading with raw materials, that the high prices, the sky high prices of these commodities will lead to, also a higher pace of shipping of this kind of materials. So This is not, flat in all the countries. I would say that where there are chances for operators to, manage the raw materials and oil and gas and commodities, the waiting times of the containers will be still short. If we look at other equipment, other commodities, other goods, well, the worldwide situation is still unstable, and maybe people at destination, buyers at destination, would rather, wait instead of going through a lot of investments, which would of course lead to shipments and all related services. So I think that the main point is on commodities other than oil, gas, and other raw materials, which are vital for the energy sector.
And from our perspective, the delays in pickups is basically driven by the congestion at depots.
Also, of course.
It takes longer before your container is accessible and ready for collection, and that is causing the significant delay, so to say. And that also answers basically the other question from Cesar regarding the new build units that are being offered on the market for very low prices. That is correct. That is what we see as well. But that is also driven by the lack of depot space.
Yeah.
And those MVOCCs, but also other owners of equipment, they were able to collect significant high pickup charges, and they basically use those kind of pickup charges to sell the unit with a loss, driven by the lack of depot space.
Yeah. That's what I was trying to show before. We got involved in some rush deals, and the only option for us was to get rid of the containers at the very, very, very low prices.
Yeah.
Also, let's consider that the market is unstable. So there are operators that are selling containers for very low prices, and other operators that have containers in stock for very high book values, and they won't give up. So that in the same location you could find someone selling for very low and someone selling for very high.
Yeah, no, makes complete sense. Maybe if we spend 1 or 2 more minutes here, Maria was then also asking about the equipment availability situation in Europe, essentially hypothesizing that a decrease in shipment of one-way boxes from China to Europe essentially leads to a decrease in availabilities and an increase in prices. Does that concur with your view?
Sorry, can you repeat the question again, Christian?
Sure. So Maria hypothesizes that right now there's fewer one-way boxes coming from China to Europe because of congestions and disruptions. And she says that likely then container prices might increase again in the foreseeable future because of this lack of supply. Is this
well, that's a good question. And well, of course, we had the bottlenecks. So there was still some supply in Europe. Even though without the export from China. But now we come in a situation, and we see it already on the reefer market, where there is a shortage in Europe for reefer containers at main ports. So that could be absolutely a driver and could lead to a surge in pricing. Absolutely.
Yeah, that was my experience too. There are at the region some factories that started to increase a little bit the container prices, but I think that's gonna be only in the very short term, because once the lockdowns in China will be solved, everything will go back to normality.
Perfect. I think there was a brilliant sort of last sentence. Everything will go back to normal. Let's hope for that, and let's work through disruptions, which of course always provide significant opportunities along the way. Thanks a lot for your contribution. Thanks a lot for taking the time and the discussion. I think this was super insightful. I guess I let you go now. We're already a couple of minutes over. Thanks again, and hope to speak to you soon, and hopefully see you in real life at a trade show or conference as well.
That will be nice.
Yeah, of course. Thank you, Christian.
Thanks, guys.
Thanks,
everyone.
Bye-bye.
Bye bye. Bye bye.